Well, good day, everybody. Thank you so much for joining us. Today, we are honored to sit down with Erik Voorhees. Erik is the founder of ShapeShift.com. He has been a thinker in the Bitcoin industry since very early on. I know when I entered the space in 2011, 2012, he had already written extensively on the nature of money in general, as well as where Bitcoin fit into that. So thank you so much for joining us today, Erik.
Yeah, thanks a lot for having me on.
So you're announcing that ShapeShift has acquired Portis, which is an Israeli startup and non-custodial software wallet solution. And in the press release, it says that these two companies share a single vision. The quote, the creation of an open financial system in which self-sovereignty is easy and accessible. My first question is, how do you see an open financial system, or what is an open financial system in your view? And where does self-sovereignty fit into that?
Yeah, so I would define the open financial system fairly easily as a system that anyone can connect to. Basically, as long as they have a computer or a phone, they can connect to it. It doesn't matter where they were born. It doesn't matter what passport they hold. It doesn't matter what country they're in. It doesn't matter what race or gender they are. It is a totally blind and agnostic system, and anyone can interact with it. So similar to how the internet itself works, that's the kind of model that people should expect when it comes to money, not just information. And then in terms of self-sovereignty, I think this is largely a point about self-custody. Basically, the idea that you should be able to control your assets and have full unilateral ability to send and receive with any other person on Earth. And cryptocurrencies allow you to do that, but obviously if you are letting some other party hold your funds, then you do not have self-sovereignty over those assets. If they can be frozen by some other party, then you are trusting them. And I think that that's okay in some circumstances, but people should expect and understand how to use a system, a financial system, in a full custodial self-sovereignty kind of model.
Could you discuss self-custody at ShapeShift and what that looks like and why that is so important to you?
Yeah, well, ShapeShift started in early 2014, and its sort of defining attribute was, unlike every other exchange in the world, it didn't take custody of user funds. So basically, a user would hold their own Bitcoin in whatever wallet they were using, and when they wanted to convert some of that into Litecoin or into Ethereum or whatever, they would send a transaction to us, and we send a transaction of that other coin right back to them, so that they are not holding a balance with a third party over an extended period of time. So this is important, obviously, for anyone who's aware of, every few months there's some big exchange hack, and hundreds of millions of dollars of cryptocurrency has been lost from these hacks. But more than hacks, I think hacks will ultimately be solved over time. But the bigger issue is that when you're allowing someone else to hold your funds, they have control over them, and that means there will be political influence to stop payments or to prevent someone from controlling their own wealth. So that's always been something that's personally important to me, because Bitcoin as a protocol allows that full self-custody and full self-sovereignty. So when we built ShapeShift, we wanted to have that same principle, and we've kept with that ever since back then.
Bitcoin really took off, I think, in 2011 as Wikipedia had all of its, or not Wikipedia, excuse me, WikiLeaks had its ability to take donations cut off via like mainstream financial institutions or legacy financial institutions. And at that point, Satoshi was a little nervous because he wasn't sure that Bitcoin was prepared for that deluge of attention, et cetera. But nonetheless, it happened.
Yeah.
And that's really kind of the first wave in which Bitcoin was popularized. Of course, in 2013, the price rise did a lot to broadcast Bitcoin through the mainstream. But certainly, as you mentioned, that is one of the main use cases of the Bitcoin protocol itself. And then we've seen a lot of the exchanges kind of develop over time. And I think that like hacks are certainly less of a concern than like people being able to to make less than moral decisions when they have other people's funds, as well as the political pressure that they could come under. I'm curious, now you're kind of putting together a toolkit for decentralized finance. Decentralized finance is somewhat of a novel concept in blockchain, although it's certainly getting up there in age now. I'm curious, when did DeFi as a concept or idea come on your radar? Do you see Bitcoin as DeFi? And where do you see ShapeShift taking its decentralized finance toolkit?
Yeah, so good question. This term DeFi, it's definitely become a buzzword. I think there's sort of two ways to understand it. The one that's used most specifically, that is most common, is DeFi basically refers to a bunch of these financial tools that have been largely built on Ethereum around basic financial services that are composable and compatible with each other. So things like the ability to earn interest, so compound, right, or the stablecoin DAI that's set up with the maker system. These are sort of basic building blocks of a financial system that is largely decentralized. Some of it's not perfectly decentralized. But I think there's a broader definition, which I like better, and I hope becomes more commonplace, which is that DeFi, I think, will come to refer to just the entire crypto ecosystem. I mean, Bitcoin was the first DeFi project. It was decentralized finance, the specific application being that of money. And so I generally see everything in the crypto finance industry as DeFi. I don't see it, exclusive to one chain or another. It's just the whole phenomenon itself. And importantly there, I think a decentralized financial ecosystem within it will have protocols that are fully decentralized. It'll have companies that are fully centralized, and they'll have lots of gray area between those two things. So it'll be an ecosystem composed of many different structures and many different models, but the base layer itself is one that is decentralized, in which the entire world can access. So we've gotten increasingly interested in that concept just because it is the evolution of cryptocurrency generally. And so as these basic services get built out, it allows the thesis that crypto will be an alternative to the traditional financial system to really bear out. And when we came across Portis, it was largely to integrate it into our own platform to allow people to use ShapeShift.com without a hardware wallet, which it had required exclusively before that. And Portis had done such a good job of making it easy to log into a wallet with just a username and password, and it felt as easy as a custodial solution, like a Coinbase or something, but it was fully non-custodial. And so we loved that, and have been working with them now for the last few months on this.
And I feel like one of the things that probably isn't being discussed enough in terms of Bitcoin and DeFi is how much technology education is taking place. People are going to have to learn how to like manage these devices that we've been given, learn about them, learn how they work, and then take the steps and precautions necessary to achieve self-sovereignty, to actually achieve privacy, because it's called a personal computer, where we have these personal computers, but they're certainly not as personal as many people believe they are. And I think that with toolkits such as the ShapeShift Portis kind of merger, that this is really going to force people to kind of think twice about how these devices work and how to use them. Kind of like with social media, right? Everyone kind of complains that the social media websites, they use our data to sell to advertisers or to use in their advertising regimes. But if you accept that as reality, you can then use these applications in ways which also benefit you. And I think the same will be true with these with self-custody in the cryptocurrency space. And I see your your Twitter account is a great example of a great way in which to like really get benefit out of that app. And I see that kind of evolving on into the future with DeFi and hopefully Web3 applications as well, although that is a long way out. In the press release, you write that you state that after integrating Portis's SDK into the ShapeShift platform last year, we recognized the depth of their tech and how closely our values aligned. They really built something special, making self-custody extremely easy. As our relationship evolved, acquiring Portis became a natural next step. Could you highlight some of the depth of their tech and why that excited you?
Yeah. So largely when you see something that's very complicated, it might seem impressive because it seems like it was difficult to build. But I think generally when you're trying to build things for consumers, the easier something is, the better the technology. And Portis's login flow was just so elegantly done, and the fact that it was not reliant on any sort of special, server hardware module or anything like that. It was just, pure client-side encryption of keys done in an elegant way that a user can access with a username and a password. I generally don't think that people will seek out security with much effort. Everyone wants to be secure, but they often won't spend the time to do it or to learn about it. And so to get people secure really is a matter of making something so easy that they just tend to use it naturally because it's the best system, the easiest for them. And Portis, in my view, had done the best job of that. So now, all over the DeFi ecosystem, all these various applications and services, there are multiple login options, one of them being Portis. I think Portis is the leading one at this point. So you can log in with Portis, and then your wallet is with you wherever you're logging in. And that was the angle from which we approached Portis to begin with, and we added that to ShapeShift itself. And you never really understand a software until you start building with it. And our engineers loved it. It was smooth. It worked. It did not cause any kind of spike in customer support issues. So just really well engineered software, and very, very impressed with what they had done.
Will this acquisition take the form of an acqui-hire, or what's kind of going on behind the scenes insofar as you can elaborate?
Yeah, so Portis is an Israeli entity, and we just acquired the entity outright. So ShapeShift is a Swiss entity at the top. It's a Swiss holding company, and then below it, it has several subsidiaries. One is a UK entity, which is the operating entity. That's what runs our service to customers. We also have a US entity that handles all of our like office and payroll and all that kind of thing. And then now we have an Israeli entity as well that is Portis. So yeah, ShapeShift just owns 100% now of that Portis entity, and all of the employees, well, almost all the employees that were at Portis are now employees of ShapeShift.
What's the significance of this acquisition in the context of the greater economic kind of circumstances? So, I mean, we've seen a $6 trillion stimulus be floated and passed. And I mean, what have we not seen? I think that we saw the Bretton Woods system post World War II kind of break down around 1971 when the US dollar was taken off the partial gold standard at that point. And then, for the following, say, 50 years, we kind of lived in this fully fiat system. In 2008, there was a major economic crisis, financial crash, the Great Recession. It was termed, and then the longest bull run market in history. And now we find ourselves, as far as I can tell, kind of in an entirely new paradigm. And I think modern monetarism, which is just a kind of Keynesianism taken to its extreme, where like debt is not a concern, and printing of money so that governments like or private public institutions like the Federal Reserve can make asset purchases in order to prop up stock prices is the new normal, which is a term I'm seeing kind of thrown around a lot these days. I'm curious, like within the context of that, do you agree with that? And then also, what is the importance of ShapeShift Portis in that context?
Yeah, I'm just appalled and shocked, and I just have to laugh about this. Like, uh, all the mainstream economists, everyone on Wall Street, everyone in the government for sure, and much, if not most, of the public is enamored and fully supportive of this idea that you can create wealth and prosperity by printing money. And I feel like 20 years ago, that was a laughable thing that people would joke about if you brought it up, and everyone would recall stories of Zimbabwe or the Weimar Republic. And people started trying it out more in the 2008 financial crisis, and it's called all sorts of things. Quantitative easing is just an amazing twisting of words, which is just creating money out of thin air and buying bonds from the federal government. But it's now commonplace. It's now status quo. The solution to economic problems is to print money. That's what all these people say. I think it leads to disaster, and I also think that within a generation it will become very apparent that it was a disaster, and people will be horrified that it was ever believed that you could print money to create prosperity. And so, like yesterday, the big headline was Federal Reserve injects $2.3 trillion into the economy, which sounds, so strong and muscular, like, cool. It sounds stimulative and like it'll fix things. But how many people are asking, like, injects that from where? It's not like the Federal Reserve had $2.3 trillion of assets that it had saved up through prudent financial savings over time. Where did it inject that from? Well, the answer, of course, is that they just created it out of thin air. They just printed the money. And so the entire media industry is totally complicit in this narrative now. And even when they write a headline like Federal Reserve injects $2.3 trillion, I feel like they are complicit in this fraud. They should be saying Federal Reserve creates money out of nothing in hope of fixing the economy, or something more accurate. But certainly people like us that are opposed to that whole way of thinking are in the minority right now. And I think the best thing we can do, instead of just complaining and bitching about it, is to just keep focusing on building this alternative financial system, which is cryptocurrency, which is blockchains, which is open, decentralized, permissionless systems. This is what the real alternative is to all this financial witchcraft. And I think the coronavirus and this economic crisis that's happening as a result of it will accelerate the timeline on which the alternative is needed. So to all those who are in this industry, my advice is to stay focused and build quickly, because the world is going to need this lifeboat very soon.
Yeah, and there's so many distractions out there, and some of the best advice I've heard is that in times of like great stress and uncertainty like now, it's more important than ever to really just focus in on like your highest priorities and kind of your highest callings, and tune out the rest of that noise, which I think is a pertinent advice. And also for us, it's just staying focused on the industry in which we're working, because in the Bitcoin Genesis block, it stated that Chancellor on brink of second bailouts. Bitcoin was released amid a similar situation we find ourselves in today. We've never seen Bitcoin exist at a point like we are now. We don't know how it will respond, but I think that it's pretty obvious people are going to start asking more questions after this kind of initial shock and awe fades, and that more people are going to be seeking out alternatives, and Bitcoin's going to be there alongside perhaps other assets. Although I've seen in the last 10 years how millennial interest and attention in assets like silver bullion and gold bullion has kind of been diverted away into the digital sphere and Bitcoin. I think that will maybe perhaps need to balance out at some point, but certainly like Bitcoin's going to be the one that gets the attention first and foremost above those former safe havens or kind of traditional safe havens. I see on Twitter, and I miss the kind of germination of this trend, the term burr a lot. So like I guess you tweeted, let's see if I can pull it up. Um, you basically thanked the Fed for their bravery and etc. And a lot of people, or you're actually, your name at Twitter right now is Erik Voorhees. A lot of people are using this term. I don't know where it came from. What is this burr referring to?
Yeah, I don't really know where it came from either, but it seems to have emerged like immediately after all this uh, financial catastrophe started happening. It comes from a meme, the money printer goes burr, and it's just hilarious and does a great job of removing all of the academic and intellectual veneer that is wrapped around the printing of money, and just shows how silly it is. And so, yeah, I mean, whenever you see the Federal Reserve Chairman get in front of the public and talk about all the things they're doing, all he's saying is that they are printing money and giving it to this person, or they're printing money and buying that thing. And so I think that meme was really an amazing way to just characterize that. I imagine it'll become increasingly popular and widely known. When I was watching actually the Federal Reserve Chairman speaking at the Brookings Institute yesterday, and I was just watching like a Yahoo Finance video feed. So I don't know how many people in that feed were Bitcoiners or not, but everyone was sending over the Burr meme through the chat channel. So it's just a fun little joke, and I think a way to make light of what is total nonsense and financial witchcraft.
So you mentioned like economic jargon and how like this kind of cuts through the vernacular, the veneer, that really bamboozles people about how economics work. Like, for instance, you mentioned like the Fed prints money and then gives it to this person or this company, like, and we term like the rate they pay on that money an interest rate. But I read it like a book once called by like Economics in One Lesson by Henry Hazlitt, and he like points out that like that term interest rate just literally means the cost of money, like what the cost of that money is. But yet we use these terms,
Right.
and I think it really does a lot to divert people, to gloss people's eyes over, so that they don't really quite go deeper and like learn about these concepts. And that
Yeah,
really,
and another good one is when people refer to the Fed as having an accommodative policy. It sounds so like comforting and mature and careful and thoughtful. An accommodative policy. All that means, of course, is low interest rates and money printing.
I'm in a lot of Facebook groups, and they're quite interesting. In fact, I've been in a ton of Facebook groups, and it was really interesting seeing how they all reacted to the recent events. But today, people are like, "Why are the stocks going up in price? Who's buying these stocks?" Well, that would be the Federal Reserve actually buying all these stocks, most likely. You mentioned like that a lot of people are sort of on board with kind of modern monetarism and just political solutions to economic problems. And I came across an interesting story this morning about like record unemployment claims. And in that story, kind of at the bottom, I read a quote by a chief economist at Narif Economics in Pennsylvania. And he writes, "For as long as this money is available in unemployment compensation, um, and the unemployment payments to lower paid workers replaces all of what they lost and perhaps even more, the incentive for many unemployed is to not accept a job offer to return to work." So this got me thinking that people are incentivized to kind of support these policies because essentially they're getting a universal basic income. And then to your point of like not kind of moaning or complaining about this stuff, like then what solutions can we create? And it's got me thinking about like that DeFi could create a universal basic income type app that then, I mean, I think that what we will need to do at some point is create tools so that people can essentially like earn just off of existing and living or off of like sharing their data. And I think that that is actually within reason. I don't think that is a huge technological leap from where we are today. And ShapeShift is set up perfectly to kind of allow people to take advantage of something like that. Like if there is a DeFi app that allows people to earn off of sharing their data on the various apps on their cell phone, for example, which all of which are accumulating your data, like potentially like in perpetuity, so long as they're on your phone. Then, they go to ShapeShift and they're able to turn that into Bitcoin or turn that into another asset that perhaps is a little bit more liquid and get that basic income in a spendable form. Like, what are your thoughts on, like, I guess mostly like
I feel
solutions?
like that's, yeah, I feel like if you are earning money by selling your data, that's not universal basic income. Universal basic income is paying people for no reason, for just existing, for just being alive, as if that creates value and is worthy of paying. If someone is able to monetize the data that they are providing to other people, that would be great. I mean, it would be awesome if there were low friction ways that people could be earning money from the data that they're giving out. Right now, that value is captured largely by big companies. And I don't fault them for trying to capture that and for doing it successfully. I think if people want to use those services for free, then they need to know what they're giving up. But that's on them. It would be great if people could have more options in how they monetize their data if they wanted to. But that seems like a very different concept than a universal basic income, which is to just pay people out of money that isn't there for just existing.
I guess like my axiom I'm working from is that, like, if we're on the internet, if we're using the internet, then we're almost like these hybrid android creatures, and that by merely existing, like, you are then sharing data. And so I guess we could like discuss whether that's universal basic income, but having an
Well, it's
alternative
the
where
difference.
people.
The difference is that if you're giving out data, you're giving out certain kinds of data in certain amounts, and no two people will be the same. Someone who sits on their couch, not on the internet, just sitting there, is not producing data that's useful or valuable. Someone who is interacting economically with hundreds or thousands of other people online, and expressing preferences and expressing tendencies and all that, that person's creating tons of interesting data. And so if both of them are paid the same amount, then it's not really being paid based on the data. It's being paid based on just just existing. So it's a question of what you're being paid for.
It makes sense. So then, in terms of like not focusing and complaining about kind of the policies that are being implemented now and working on the solutions, like, what do you think are the solutions and how are you working on those?
Yeah. So the way I see it is that we have this huge global financial system, which is built fundamentally on banks and on fiat currency. And everything really is built upon those foundations. And the banks are all specially licensed branches, which have clear and strong connections to the governments. And obviously fiat is created and owned and managed and planned by the government as well. So you have a financial system based on two foundations that are both connected intrinsically with the governments of various countries. And then you have a different system, which is blockchain-based open finance. And here, neither of those other foundations are present. It is not based on banks whatsoever. In fact, banks are generally allergic to this stuff. Nor is it based on fiat currency at all. It's based on cryptocurrencies, Bitcoin being the biggest and the first, Ethereum being the second place at this point, and many others. And these cryptocurrencies are very different from fiat, particularly in the fact that they are open. They can go anywhere in the world instantly, and they cannot be debased by some central group. So on top of those foundations, the whole cryptocurrency industry is building a new financial system. And some of that stuff in the new financial system will look similar to the old financial system. There's still going to be interest rates. They will likely be market-based interest rates rather than centrally planned interest rates, however. You're still going to have things like loans and credit scores, but the way that you create a credit score will likely be built in very different ways. You will have payment systems just like you do in the normal financial world, but they'll be different. So as all those pieces get built, it will become an increasingly plausible alternative to the financial system that people are used to. And those of us who have been in this industry for a long time have been comfortable out on that frontier, and continuing to push it out and making it more normal for people. And so we still have a ton of work to do, but it has come so far from where it was 10 years ago. I think, and it's accelerating, certainly. So I'm grateful that I'm alive and contributing at a time when something so important is happening. And I would be quite terrified of the state of affairs in the world if cryptocurrency didn't exist and if I didn't have that escape hatch. But because Bitcoin is here, because crypto is here, I know that myself and anyone who will listen to me can escape that stuff and have a viable alternative. And it's a volatile alternative, but it is viable, and I think it is more fundamentally sound. So that gives me great comfort, and hopefully more and more people will start paying attention to it.
Yeah, I echo your sentiment. I'm like extremely grateful to be able to see what's going on and understand it, because I know a lot of people really just don't have any clue at all. It's quite sad. They don't, I think for me, it's my having studied history, particularly 20th century history, that equipped me with the tools to be able to diagnose the current situation, I think, in a lucid manner. And a lot of my peers, most of my peers just do not have those tools. And they just, they not only they cannot diagnose the situation, nor could they even see this escape hatch, which is right in front of them, which I think makes us quite blessed and lucky. And then you're mentioning earlier that Portis
Yeah.
has a very elegant solution that really lowers the barrier to entry for kind of self custody. And for those who do not know, like, this is well studied, and I guess it's kind of taps up against like software and psychology, is that like when software developers want you to do things, they make it easy. And when they don't want you to do something, they make it hard. So one easy way to make this difficult is by putting more than one step in between you, and even just two steps. The drop off rate from having to achieving some sort of action, like once you get to two steps, the drop off rate for completing that action like falls off the cliff. And then when there's for each subsequent action, like the drop off is fewer people drop off, but it continuously starts trending towards like fewer and fewer people achieving that action. So could you discuss the importance of like these, why you're highlighting like these elegant, simple solutions, and like how that can be applied to crypto assets in general?
Yeah. So one lesson that I've learned, running a business and just being part of building consumer-focused services, is when you reduce friction by a small amount, you don't get a small amount increase in usage or even a moderate or large increase in usage. You can get like an exponential increase in usage from a small increase in ease of use. And this is really, I think, a profound insight. It means that you can take something that already works, and if you can make it just a little bit easier, you might see a 10x increase in usage. And this, I don't know if this is a new trend that only applies in the internet age when people's attention spans are so limited, or if this has always been endemic to human nature, but it is very clearly a true phenomenon now. And the lesson here for crypto companies is, just because you can do something currently and you think it is easy enough, don't assume that. There is always a way to make it a little bit easier, and that little bit easier can have drastic effects on it. So this is where the DeFi systems, I think, are going to be really shining once they continue to work on this for the next year or two. Is they're making the complexities of cryptocurrency more abstract, and they're allowing people to have just a slightly easier way to access something like an interest rate uh, on their Ethereum or a crypto-backed loan. And so we take that as a fundamental principle, and this, we kind of stumbled into that when ShapeShift launched. It was a way to convert one coin into another. And a lot of people asked me when I started it, like, I don't understand the value here, because I can go to any exchange right now and basically do the same thing. And the difference is that we just made it a little bit easier. And that caused a significant portion of people's activity to move to us. And so I think that's really a universal principle that people should pay close attention to, and will help cryptocurrency companies attract the mainstream.
I interview small business owners about Bitcoin and why they don't accept it. And one reply I got, which was quite classic and also kind of symptomatic of people's response, was that I don't know, quote, I don't know WTF Bitcoin is. And I think it's just it's a tough concept for a lot of people to wrap their heads around, especially those that just don't quite understand economics by any stretch of the imagination. So I kind of wanted to look, Erik, you're like one of the leading minds in Bitcoin. You're one of the most tenured minds in Bitcoin. And so I'm kind of curious, when you sit back and reflect on what you've seen and being a part of this, I guess just like I don't want to say revolutionary or transformational. That might be a little cliche, but just having been at the beginning of this new paradigm, really, in finance, of there being alternatives. I mean, this notion that there's one option for money, I don't think is natural. I think that in a truly free market, there would never be one agreed upon currency. I just don't think people would come to terms with that. There would be better money that floated to the top, but I think there would be more than one option that people choose. And then I think there would be a lot of bartering that goes on, as there were more producers perhaps in such a I guess economic arrangement. And when I look back on the history of Bitcoin or crypto, I see it, you can kind of split it up into epochs. There's the Satoshi epoch, which lasted until about 2011 when he left. And then perhaps there's the next one in 2013 where Bitcoin runs up and you kind of get this popularization of Bitcoin. And that's when you start seeing it pop up in Hollywood movies, on the mainstream media all the time. And then there's this trend towards commercial adoption or co-optation, where you get blockchain, not Bitcoin. After that, it's really the fundraising days of on Ethereum, where fundraising became sort of the most highlighted use case. After that, I think it kind of trended towards back to Bitcoin for a bit, and then we moved into this DeFi epoch. So I'm curious, when you sit back and reflect, what's your mile high overview of this history you've seen unfold?
Yeah, I like to view it in my mind as a tree that kind of grows out of the ground, and it started with a seed that was Satoshi's white paper, and Bitcoin was, of course, the seedling that grew out of the ground and turned into a small tree. And then people, because this is open source software, people just start experimenting in all different directions. And these are the various branches. And so the tree gets bigger and the branches extend out. And these branches are, other cryptocurrencies, they are other use cases, they are the various companies that have been built around this stuff. And the tree just keeps growing and getting more complicated. And I don't know that it's right to think of it in terms of epochs, because that implies that one thing happens and then it goes away, and then another thing happens and then that goes away. I think it's really much more complex and nuanced than that. And it's hard because as this tree branches out in all these directions, it becomes impossible to really understand it all. I'm in this industry all day, every day, and there's so much that I don't know, so many projects that I feel like I'm completely unaware of and that I haven't been able to spend time to dig into. So many new people involved, so many startups, and it's amazing. I mean, it's become incredibly complex, but I think to see it in that sense of this spiraling tree that's growing out in all directions is the right way to view this industry.
So when you put forth this analogy, it makes me kind of think about like the second layers on Bitcoin and the potential for Bitcoin to form a layer one for DeFi. So what are your thoughts on Bitcoin's potential for being kind of layer one on a DeFi ecosystem?
The problem is that not all, the majority of applications are being built on Ethereum instead of Bitcoin. And this is partially intentional by how Bitcoin is engineered. It's engineered to be relatively simple and relatively dumb, meaning not all the complexities of Ethereum and the smart contracts that exist there. And there's benefits to that. It makes it safer in a lot of ways. It makes it more predictable. But it means that a lot of the experimentation and a lot of the engineering of higher levels is happening on Ethereum and not Bitcoin. And I don't know how this plays out. I mean, I think it's possible that both coexist very easily together. There are interesting bridges getting created between them. There's synthetic Bitcoin being created on Ethereum, and how these things, interact over the long term remains to be seen. But certainly, even without the vast amount of applications getting built on Bitcoin, Bitcoin still has, 10x the market cap of Ethereum, and has vastly higher brand recognition, is much more stable. So there, I think, different use cases for different things. If you're going to hold some wealth in crypto and you want to be conservative, Bitcoin is obviously the better place to be. Ethereum might be moving faster in more interesting directions, but it's also more experimental and risky. It's about to try to change from a proof of work chain to a proof of stake chain. If it does, that could be really interesting, but it'll be a fundamentally different security model, and that could have all sorts of ups and downs to it. So, who knows? But I'm just glad that people are experimenting, and there's so much innovation and movement happening. And you compare it to the banking system, which just the only innovation in banking in the last 30 years was, accessing your account on the internet, and that's just kind of pathetic. So I think the interesting question is, how quickly will the world move away from fiat and banks to cryptocurrencies and blockchains as the base layer? And that's largely a question for all the entrepreneurs and all the technologists of what kind of useful applications can you build, and how well can you communicate those things to the people that you want to move over.
And you mentioned that Bitcoin is kind of a simpler or dumber model when compared to Ethereum, and that's referring, I think, in part to the scripting language that was created by Satoshi for Bitcoin script, which only really has like one purpose, which is to manage the protocol and the transactions on the Bitcoin protocol. And then whereas Ethereum has a Turing complete programming language called Solidity, and this allows you to like repeat computer programs or actions, like for instance loops or arrays, and it can kind of like repeat these commands, whereas Bitcoin is unable to do that. Now it's interesting to note that Vitalik originally proposed for a Turing complete programming language to be incorporated into Bitcoin, but that was rejected, probably for good purposes, like that to incorporate something like that would not only entail a hard fork, but it would also increase the complexity on the Bitcoin protocol, which then could create all sorts of potential for unseen edge cases that create vulnerabilities. So I spoke recently with Munib Ali, Eric, and he and I had a discussion about a whole wide range of topics, including like the internet and the decentralization of the internet. And I became aware that before he entered into the Bitcoin industry, and he is a proponent of Bitcoin, I think, first and foremost, although he definitely lauds and celebrates all of the innovation in the blockchain and cryptocurrency industry. However, having come from his distributed computing background, he says that like the consensus there is that simplicity is more powerful, while complexity can be a disadvantage. And for that reason, he actually sees that there's a great potential for a decentralized financial and even Web3 ecosystem to use Bitcoin as a base layer in some way, particularly the security on the Bitcoin network. And you see a lot of like new apps that are coming out, or new protocols that are coming out, which are leveraging Bitcoin security while being able to bridge a asset to the Ethereum protocol or blockchain via like certain bridges or APIs that are created. So like there's TBTC, which is essentially like a Bitcoin backed or based asset that's issued on Ethereum as a token. Tokens that represent Bitcoin are becoming increasingly common and also increasingly hyped, if you will. Any thoughts on any of that?
Yeah. Yeah, I think there is a mistake that all applications and all uses need maximum security. And to use an analogy, like say you set up a lemonade stand and you're receiving some payments from customers. How much security do you need? Do you need like a battleship, 100 yards away guarding what you're doing? No, you probably just need like a little paper cup to put the coins in and just keep your eye on it. Now, if you're moving billions of dollars around, you probably want vastly more security than that. So the security model should fit the use case. And I think there's a lot, so even if you cede the point that Ethereum is less secure than Bitcoin, which in a lot of ways it is, many applications don't need any more security than Ethereum provides. And that's okay. People shouldn't try to have this kind of one-size-fits-all conception of what a correct security model is. There are trade-offs here.
Yeah, when you subsidize something and only that thing, then in many cases you might end up with too much of that thing. So like the only thing that Bitcoin subsidizes is security. There's no other concern for anything else in that system. So maybe an analogy, and I haven't really thought this through totally, was that like the United States has a long history of subsidizing its farmers, which I think probably results in excess like corn and grain perhaps. But I mean, we have a long history of
Yeah,
subsidizing farmers. So
yeah,
just to wrap up
which is
here,
so silly.
I kind of want to kind of zoom back in on ShapeShift and kind of discuss like what it's been like being able to build this company, because I remember when it was a brand new app and you're really kind of I mean, you're very well known, but in a kind of modest and stealth manner, you're sort of like creating something that I think is going to like that you're building something for the long term, which I think a lot of people are not doing in this space. They're kind of like, in a raise funds and then sell mindset. And that's something I discovered back in 2017, how um how kind of, I guess, common this approach to building businesses is. So I kind of want to learn a little bit about what it's been like building ShapeShift. And to get started on that, my first question is, where did the name ShapeShift come from?
Yeah, the name was just it just kind of came to me. I was thinking about the idea itself of just an easier way to convert one crypto into another, that should just be so super easy. When you're not dealing with fiat, there should be no delay, no need to create any kind of account. You just have one, you click a button and it turns into another. The experience should really be no more complex than that. And that was the genesis of it. And so in thinking of what that should be called, ShapeShift, the shifting of one thing into another of its shape was just a clear and obvious good name. And it has an alliteration, and it was just like a perfect name. So it stuck quite early.
And then could you just kind of, what's it been like building ShapeShift? And I may be wrong, but I believe you started in 2014.
Yeah.
What's
Yeah,
it
the
been like?
idea was February 2014. The first customer transaction was July of 2014. It's been so many ups and downs, and it has been a exercise in learning that building a company is so little about ideas and is so much about execution and is so much about organizing people. This has kind of been a big lesson for me is just after you get past 20-ish people, building a company is really about organizing humans and communicating with humans. And this is something that's not at all intrinsic to cryptocurrency. So I've had to learn how to do that well, and I've made a million mistakes along the way. And I feel like when I started ShapeShift, I was such an amateur, and at this point know so many things that I don't know, which is nice, but it's been a painful several years of learning this stuff. I mean, like our worst and most difficult challenge was, of course, when we moved to implement KYC, which ShapeShift never had in the beginning, and which I was and still remain vehemently opposed to on ethical grounds. But we did it because the legal risk of not doing it was too great, and that became apparent with millions of dollars of legal work. And that was extremely disheartening, depressing for me and the whole team. Obviously, our customers hated it. We lost the vast majority of our business because of that decision. And that decision was, as you mentioned, one that was really meant to set us up for the long term, because there was no way we could build a big company by having all that overhanging legal risk. And I didn't want to let the business get destroyed and me and other people at the company, thrown in a cage just because of these rules that were set up by politicians that don't understand money, have never built anything of value themselves, and really have no conception of what ethical behavior between humans is. And that's a really hard world to live in, and a hard thing to swallow. We still struggle with it, of course, and so we've been adapting, and we've been re-envisioning what ShapeShift is over the last couple of years. But it's been a huge struggle and very, very difficult. Hopefully I'll be able to tell a more full story about it someday, but even talking about it carries legal risk, which really, really sucks. And so yeah, that's tough. But I didn't start a business to have some kind of easy, comfortable life. I'm trying to do something challenging to myself and build something that is valuable and useful to people. And that's just a struggle every day, but ultimately is very rewarding because it's meaningful.
Yeah, I've always kind of been on the front lines of my own income. I like very rarely have had actually jobs. I graduated college in 08, 09, and like I quickly moved into the precious metals industry. But since then, as my work gravitated towards Bitcoin and online work, I've always kind of had to be my own advocate, my own boss, my own kind of just I guess a solopreneur, if you will. And like the battles that I've had to wage because of that, I think have really made me stronger. I know they're making you stronger person, and more kind of just um, more prepared to kind of move forward into this kind of brave new world in which we're moving. And I'm really grateful kind of for that experience and all the struggles. So I'm curious, you mentioned like the emotional toll of that change. Could you kind of discuss like that? You used the term depression and coming out of it, how you overcame it.
Yeah, I mean, I've never sunken into a depression myself, but the whole situation has been very depressing. To build something that you see as important and valuable because it protects people, and ShapeShift protected people basically in two ways. One, it was not custodial, and we've maintained that since the beginning. But two was that we did not require personal private information from them because we didn't need it. There was no reason to take someone's personal information in order to trade one asset into another. It's not needed logically. And so by taking it, obviously we are endangering them, we're endangering ourselves, we're putting a whole bunch of information into one place where it can be exploited by hackers. And so to be forced by governments to endanger people is really a miserable feeling. And to do that, and by doing it, nearly destroy your own business, all the work that the people at your company have done, and have all your customers irate at you at the same time, purely because if you don't do it, you'll be thrown in a cage. It's just a horrible feeling. It does not feel like how adults should treat each other, and so that's just been a really fundamental human struggle, I think, for me and others at the company. So what you do ultimately is you try to look at the bright side, and you try to look at what you still can do. And what we still can do is help people use crypto in a self-custodial way, where they are controlling their keys, and to make that so damn easy for them that they never feel that they have to trust a third party with their funds. I think that's an extremely important mission, and so ShapeShift has done that ever from the beginning, and will continue with that model. And so that's what we focus on. And we've gone from a company that was just about converting one coin into another, into now really a full crypto platform that maintains fidelity to a non-custodial pool. So I think in some ways we are the best way to interact with your crypto assets. And obviously you can still trade through us, and you can do it now with 0 commissions. You can buy crypto with fiat from a debit card in 10 seconds from your computer. Our mobile app will be coming out soon. We're basically just trying to make self-custody so easy and secure for people that that they have no reason to use anything else. And that's an important task, and so that's what we focus on.
Yeah, one of the things I've learned that's most important in running your own business is like turning a crisis into an opportunity, because those crises come up quite a bit. And kind of in conclusion here, I'm curious, what's been the most rewarding aspect of this journey?
Yeah, good question. I think the most rewarding aspect of the whole journey is just seeing crypto rise, because I feel like I'm running a department of the startup, which is cryptocurrency. That is really this massive global startup that all of us are contributing to, and I have this little department called ShapeShift, and so I run that. So there's sort of the reward of seeing cryptocurrency taking over the world, which is profoundly fulfilling and exciting. And then within the company itself, we have dealt with 10 or 100,000 challenges. I don't know what the number is, but we just keep figuring them out and getting through one after another. And that struggle and just overcoming challenges that could be very defeating, solving every problem that comes in front of us, doing that over time is extremely fulfilling. And I think any life that is spent comfortable is a life that won't be fulfilling, and is a life that won't be producing meaningful value for others. So, every day I get to work with my team at overcoming challenges and building an amazing crypto platform, which is, it's an artistic expression, it's an engineering expression. Ultimately, it is a political and ideological expression, and so that is, I think, the meaning of life, to be able to do that. And for all the challenge, it's very, very fulfilling, and I love being able to work with the team here.
Well, thank you everyone for listening. We've spoken today with Erik Voorhees, the CEO of ShapeShift.com, a self-custody crypto platform. Thank you so much, Erik, for speaking with us today, and stay safe out there.
All right. Thanks so much. It's been fun.